Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York on Thursday, May the 5th, 2016, and we are looking at the Dow Jones Industrial Average, which is just settling nominally higher on the day, trading up roughly 10 points at 17,660 on the day. Now, Standard & Poor's closed a little bit lower off on the day, off about 3 points at 2044, low on the day 2039, and the high 2060. Of course, traders and investors are awaiting tomorrow's numbers on the most recent jobs figures and jobs report, which will come out to see whether or not that could influence the Fed to initiate a rate hike in June, which we absolutely believe is not going to happen. So although we have seen the Dow Jones Industrial Average close nominally higher on the day, I still want to characterize today's trading activity in essence as an unchanged trading day. We looked at this chart yesterday, Dow Jones Industrial Average, and all we've done here is kind of highlighted some recent highs in the market and are looking to extrapolate different areas of support and resistance based upon that. Now, this high that we got here, which came in really just over 18,000, absolutely, when we look at in terms of historical data, we can see that it absolutely matches quite a few different areas in which we had the market hit these highs and then run into an incredible amount of headwinds. You can see that all along throughout last year. It was actually the high just prior to the August meltdown, of course, when the market came back up, of course, after that, and this going into the Christmas holidays, October, and this being November here. The next set of highs, we then had a double top here and here, but that was below. It was actually right at around 18,000 as opposed to above 18,000. So up until this most recent top that we got, call it beginning of April or mid-April, I should say, last month, mid to end of April last month, since we got this top, this is the first time we've seen this occurrence really since almost about a year ago, 10 months ago, when the market did flirt with this particular area. Now, we've seen the market come under pressure. The logical place for us to look for a conclusion to this in terms of the Dow Jones Industrial Average is roughly at 17,500, 533. Market close at 17,660. So just about 100 points from there. And this is the first place I believe, if the market continues under pressure, this is where I believe we could find some support. Now, here's where I believe it starts to get interesting. We pulled up the Standard & Poor's 500, this, of course, being our E-mini. Take a look at this. This is our short-term 50-day moving average, and look at the fact that at this point, we have lows that come in just below that moving average. So this is a logical place based upon a 50-day moving average to look for the market to find some tentative support and then begin to move higher. My sense is that if it finds support here, we'll get our bounce. If it does not find support here, I believe it will come in and test the 200-day moving average, which is sitting at around 2007 to 2010. So we have crude light attempting to find a little bit of support, although I believe we pointed out an area that should be some pretty difficult resistance to overcome. Comes in at roughly 46.5, 47. It is simply based, this is a weekly chart, so it's based on these last two weekly highs this week and last week. We can absolutely see that this week is under pressure, although it is now coming up off the highs, trading up about 1 1/3% today at 44.39. And then finally, I absolutely want to take a look at the dollar, because the dollar has been so resilient over the last 3 trading days. We talked about the fact that this dollar had been, US dollar had been under extreme pressure, coming down and breaking below, excuse me, about a 93.80, 94 support level, which I believe was absolutely critical. Now, following the break in the dollar index that we saw last week when it broke below this price point, consider this. It went below 94, went below 93, went below 92 to hit a low of 91.91. That's this low right here. But then look at the last 3 days. First of all, it just rips off of these lows. And this, of course, would have been Tuesday, Wednesday, a higher high, higher low, and today, a higher low and a higher high. And in fact, we pointed out the fact that gold was trading higher last night, even within the headwinds of a stronger U.S. dollar. Let's see what the jobs report brings tomorrow. But as I said, that we are looking at a potential area to find some support in U.S. equities. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly review and wrap up in trending markets and the gold forecast. Bye-bye.